NXP Semiconductor reporting its third quarter earnings moments ago. The stock is just fractionally higher after hours. Joining us now is Bernstein Senior Analyst Stacy Rasgon. He's got a market perform rating, $210 price target. Stacy, good to see you. So this seems like maybe a wipe the brow moment on NXP, particularly when it comes to the guide. I had seen some people concerned that they might guide lower than $3.4 billion for Q4, and the midpoint is right there. How do you feel?
Yeah, in the quarter, this is kind of in-line-ish. I mean, it's in line to just a hair above on the quarter. Revenue just a hair light on the guide. EPS a hair above. I mean, it all kind of washes out. It's mostly in line. But given what we've seen out there, yeah, maybe there's a little bit of a sigh of relief. Like we do know among their peers, things like industrial and IoT have been quite weak. And their business has already been kind of rolling over the last several quarters, but I think there was some concern that it could be weaker, and it seems okay. And then there's just a lot of burgeoning concerns about automotive just in general because of how robust it has been. And we are starting to see some cracks from other peers in that market. And so at least for now, it looks like it's holding up. Everything's holding up, at least within the realm of expectations. Looks okay.
So there was some concern about some of the higher-end European automakers slowing down. I don't remember if that was in onsemi's numbers or in somebody else's last week. Is the story overall in autos now, after Qualcomm and now NXP, that there is more stability and that those concerns were one-offs or company-specific, or is it still uncertain?
I think that is the question. I think it is still uncertain because it's not just those guys. We started even hearing issues like the quarter before from some peers, but it's been very mixed. Some companies are seeing issues. Some companies are saying things are fine. And there's not really like one sort of like discerning like way forward for anybody here. Like there is still some uncertainty there. I do think that that's one thing that investors have been nervous about for NXP. It's just, it's actually a very good company. It's just they have 60% of the revenue, give or take, that's automotive. And so if you're worried that automotive has just been incredibly robust all through COVID, it's like kind of the one last end market that's sort of holding in. At somebody, if you worry that starts to roll, that makes people nervous. And I think that's where people have been on NXP. Again, like at this point, it looks okay. There's some information we won't get until the earnings call tomorrow. Like this is just in the release right now. We'll be looking for things like, what is the guidance by segment? And it is auto strong or weak, and we'll see where it is. The other thing I think people are going to be interested in is what's going on with channel inventories. So they've been deliberately keeping their channel inventories quite lean, and they're still lean. They're about 1.5 months. Their normal is like 2.5 months. So that'll be one of the questions: is are they looking for channel inventories to start increasing? Are they going to be shipping to the channel, or are they keeping things lean? Those are some of the things people are looking for tomorrow.
Okay. I mean, you just took some of my question right out of my mouth because I was going to ask you what you're looking for on that call. But Stacy, I realize 60% of revenue is auto, and that's really been the area that's hanging. Okay, that's really been hanging on. Where are we at in terms of the cycle for everything else, and how much is that? Those signs of recovery or at least stabilization going to matter? Yeah,
you bet. So a lot of the end markets are weak. So industrial is clearly rolling over. And again, their industrial numbers are down like pretty decently year over year. So they're seeing some of it here. But then end market looks like it is rolling hard right now. Mobile looks like it may have stabilized. Their numbers are down, but I mean, they did sort of beat the street expectations and their own guidance, I think, for mobile. And we saw this with Qualcomm and some of the others, that market may be stabilizing. PCs, they don't have a lot of PC exposure, but PCs look like they've normalized. I think traditional data center is currently weak. They don't have a lot of exposure there. AI is off the chart strong. They don't have a lot of exposure there. It's primarily for them, it's auto, industrial, and mobile. Within those end markets, I'd say industrial is rolling hard, mobile stabilizing, and then auto, I think, is TBD. I think that's the question. For now, auto looks like for them that it's holding up.
Okay, you got a market perform on the stock. You got a price target that's 210, so higher from here. Do you buy into NXP, or is there something else that's more compelling as we get through earnings season here?
Like we'll see how things go. Like I have preferred, at least within my analog or diversified names, companies that have already cut and cut sizably. I like in my, I cover ADI and TI and NXP in that space. I do prefer ADI a little over the others. They've already cut big. They've got a little more like resilient margin structure, and I can sort of get a good feeling for trough earnings. I think with NXP, look, if their auto business really is okay, then the stock's probably fine for me. But I think that is the question. And I've been nervous about auto for 2 years. To be clear, I've been wrong. Like auto's been amazingly resilient, like much more so than I ever would have thought. But that is the question. How much longer can it carry forward? But if their auto business really is okay, NXP at these levels doesn't look unattractive.